Hey everyone, welcome back to Corporate Decoder, where we translate corporate doublespeak into something your grandma could understand. Today we're cracking open Titan Environmental Solutions' latest Form 8K, and let me tell you, it's a bit of a roller coaster in potential future offerings and a whole lot of hope. Here's the gist. Titan Environmental Solutions, a company with a name that suggests they're saving the planet, just sold a bunch of preferred stock. But the really interesting thing is the price of that stock is tied to a future public offering. And if that offering doesn't go well, they might have to give away even more stock. It's like they're saying, please invest now and maybe we'll give you a discount later if we can't convince other people to invest at full price. Plus, a company director bought some of that stock. Let's see what's really going on. Alright, first things first, what's a Form 8K? Think of it as a corporate oops, we gotta tell you something important form. It's what companies file when big stuff happens between their regular quarterly reports. Now, let's see what Titan Environmental wants to tell us. So, this report is dated March of 2025, which is when all the fun started. What kind of fun? Selling stock, of course. Titan Environmental Solutions, based out of Michigan, is the company we're focusing on today. They're in the environmental solutions business, but exactly what solutions they provide isn't super clear from this filing. Maybe they're cleaning up toxic waste, maybe they're selling eco-friendly cleaning products, who knows. The important part is they needed some cash. They filed this report because they sold something called Series C convertible preferred stock. Sounds fancy, right? Let's break it down. The company sold shares of Series C convertible preferred stock. What is preferred stock? Well, it's like regular stock, but with a twist. Preferred stockholders typically get paid dividends before common stockholders, and they also have a higher claim on assets if the company goes bankrupt. In exchange, they usually don't get to vote on company matters. So basically, these investors are getting a slightly safer investment in exchange for less control. This offering was to accredited investors, which are rich people and institutions that don't need the same level of legal protection as the average retail investor. Bought some of these shares, that's not necessarily a red flag, but it's something to keep an eye on. Sometimes insider buying can be a good sign, meaning the director believes the company is undervalued, but sometimes it's just a way to prop up the stock price. They sold 500,000 shares, raising a total of $1 million. Not a huge amount in the grand scheme of things, but every little bit counts, and they said they will use it for, that translates to keeping the lights on and paying our bills. This is where things get interesting. The price these investors paid could change. The filing mentions the filing says that it's their plan for a public offering of shares on common stock. Basically, they're planning to list their stock on an exchange so anyone can buy it. If they sell those public shares at a lower price than the $2 these investors paid, then Titan Environmental will issue more shares of preferred stock to compensate. This alternate price thing is bizarre. It's like saying, we think we can sell these shares for $2, but if we can't, we'll give you extra to make up for it. So here's how it works. If the stock does not go well, they're going to issue additional shares. The alternate price is equal to the price per share in the IPO multiplied by 40, and then you divide the total by 10. So it is only 40% of the IPO price. This is a big risk to this company. There are also additional rights to the preferred stockholders have the right to buy more shares in the future and to exchange their shares. This gives the preferred shareholders some more leverage, which is not great news for common stockholders down the line, because their shares are getting diluted, which basically lays out all the rules for this special stock. It says they can issue up to 6.5 million shares of Series C preferred stock. They only sold 500,000 so far, so they have a lot more they could potentially sell and can be converted into common stock. It gets better. Each share is convertible to the stated value of $2.40 per can be converted at 0.5 cents per share to common stock. So that means each share is worth 48 common shares. This is more dilution for common stockholders. There's also a beneficial ownership limitation, which is a fancy way of saying these investors can't own too much of the company. This is actually in place to protect the company from being taken over. In theory, preferred stockholders, however, the company still has to notify them of meetings. But as long as any shares are outstanding, the company cannot change the rights of the preferred stock. However, this gives the preferred stockholders some power, average of an incravariant without the affirmative vote of the preferred stockholders. This gives the preferred stockholders some power. A company also has to give out dividends to preferred shareholders equal to that of common stockholders. However, there's a clause that states that if the dividend would cause the common stock beneficial ownership percentage of such holder to exceed the beneficial ownership percentage of such holder to exceed the beneficial ownership percentage of such holder to exceed the beneficial ownership. Upon a Preferred stockholders would get the same amount as common stockholders, but preferred stockholders go first. It's called part parsu. Now for the legal mumbo jumbo. This section just says they didn't register these stock sales with the SEC because they didn't have to, thanks to some legal loopholes. Basically, they sold to rich people who are supposed to know what they're doing. The most important takeaway is that they filed the Certificate of Designation to so. What's the story here? Titan Environmental Solutions is a company that needs cash. They're trying to get a public offering, doesn't go well because it will dilute shares. For investors, I'd say proceed with extreme caution. This feels like a company that's struggling, and this stock sale is more of a band-aid than a long-term solution. Keep an eye on that planned public offering. If it gets delayed or cancelled, that's a huge red flag, and that's the story behind the story. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive, hit that like button and subscribe for more plain English explanations of corporate filings. Let me know in the comments which company you want me to decode next. Until then, stay skeptical and keep those investments diversified.